you this morning presenting at the conference and some other bank CEOs, very optimistic about the consumer, it seems. Talk us through that. And then you've got some sort of unique data you always have about how retail sales is going in the holiday period.
Well, you have to start a little bit from the structure. In the end of the day, the U.S. economy is 2/3, 70% consumer driven. And so if the U.S. consumer is doing well, we know the U.S. economy is going to do pretty well. And so if you look at our spending, just in general, last year to this year, it's up about 5.5% to 6%. And that's across $3 trillion of card usage, of checks written, of cash out of the ATM. So it's a big data set. It's grown faster during the year, picked up a little pace, and that's good news. And if you look at the holiday spending, Wednesday before Thanksgiving to the Cyber Monday, up double digits, strong, and people are spending. And so that's good news for the U.S. economy. And so that helps sustain this long, growth session we've had even longer because that U.S. consumer is employed, wages are growing, and will spend. It's a terrific win in the sales of U.S. economy.
When you see that pickup has happened for the consumer, what do you think has driven that? Is it cyclical factors like rates being low, or is it something structural that has meant during this cycle the middle classes has grown in overall wealth?
At the end of the day, what's driving it is the consumer. The average consumer in America, there's 330 million people, about 150 million of them work. They have a job. That job, they're growing in promotions and they're doing things. A teammate that started in 2010 for us at $50,000 has had 10% per year salary and wage growth per year. Mm-hmm. So they're making more money and they're spending it. And so that's happening across. And if you actually look at the recent data, you're seeing a faster growth rate in the median income level than we've seen so far in this recovery. So that's all good news. But it's all driven by great employment, by America's success in the worldwide economy, the ability to employ people, the ability to pay them more. And that's what's driving consumers to spend. That's when they spend. They're not going to spend if they're worried about their job or worried about getting paid.
Is the corporate sector weaker?
The corporate sector is more muted. Largely, you really have to think about triangles. The largest companies being the smaller size, smaller numbers at the top, and a big base of small businesses. We're the largest lender to small business in the country, and our loans grew third quarter last year, third quarter this year, by 6%, 7%, 8%, whatever it was. But that shows you there's good, robust activity, and the confidence level of those small, medium-sized businesses is okay because it dripped down a little bit, came back up, mostly because they're exposed to the U.S. economy. Mm-hmm. When you get bigger, you have the trade issues, you have to worry about China's slowdown, you have to worry about Europe's sluggishness, Japan's sluggishness, Brazil, because you're involved in worldwide commerce, both in how you get your products to sell in the U.S., but also where you sell around the world. And so our observation has been as you get higher up, the nervousness about what's going on, but they're still employing a lot of people, fighting to get people to do the work. But on the other hand, they're borrowing a little less. The corporate loan growth rates slow down a little bit this quarter, largely because people are trying to figure out when does this all mitigate.